everybody. Welcome to the Trading Market Technicals morning call video for Friday, October 25th. Well, we got another update in the markets. The markets are kind of indecisive on which way it wants to go. We've been stuck in this range, the upper end of the range actually, near the highs, which is bullish, unfortunately. Dow Jones up 95, Nasdaq up 21, S&P up 5, Russell up 7, almost 8 points. So the market took back just about everything from the previous day. So what does that tell you? Well, that tells us that the markets definitely are a little tired. Their momentum is definitely waning. However, price is what pays us, so we really need to understand that. And I think the markets are definitely going to be due for some sort of a breakout and/or breakdown. Unfortunately, the path of least resistance is high, but I think is higher. Excuse me, but I do think risk is to the downside. A lot of things that during the day that I've noticed is a lot of the high-flying tech stocks have been succumbed to some selling, and even on an intraday basis, you take a QIHU or any of the big names. They make new highs, and all of a sudden, within 25 minutes, they're down $2, and then snaps right back again. That's a jittery market. That's something that you need to understand if you trade in this type of market pretty much all day. Obviously if you just taking your spots and you have a job, obviously it's not going to really affect you as long as you put your stops in place. But there are a few things that I see that's obviously a concern to me. I love to see the market pull back so I can buy into the market. Then I started thinking yesterday, well, the markets are at all-time highs, kind of different from the last several years where we have our Santa Claus rally. Instead of having that Santa Claus rally and a little bit of a pullback, right? We have that little bit of a pullback and then a Santa Claus rally. That's what I'm anticipating. Not that I'm actually positioning myself for it. How about the market starts to sell off in anticipation, saying, hey, we're at the highs here. I want to lock in these profits going into the end of the year. I mean, because we are at ridiculous levels at the moment. So that's something that I want you to think about. Not to say to go out and just sell your stocks, obviously. Let price dictate what is the next correct thing to do in the market when you're trading. So I would be actually be open-minded about this, where we are right now. The markets could easily, guys, go up to 1780. There is a target up there, actually, even 1800 for that matter. However, when you have the markets extended this much, you have to be careful and cognizant of a deeper downside correction. Now, what's the catalyst? Really, there is no catalyst unless there's a profit taking, because the markets have already accepted the fact, since the Fed is in this market and pumping liquidity on a regular basis, there's no reason to sell stocks. Well, what about if several funds decide to take profits? That's going to be really what the anticipation for the next pullback, or at least a correction, would be. And now, since we're at these lofty levels, we can see an easy 10% correction at these current levels. So just keep that in mind. I want to go into some of the indicators. I'm not going to bore you with a lot of details, but I want to show you just a few things here. The markets are at all-time highs. We're not making all-time highs in the New York Stock Exchange 52-week highs here. We're actually downtrending. Even though we did spike up here, we're actually below this downtrend line, while the S&P are at the highs. So that's something that it's a concern. Now, indicators are just that, indicators, right? They need to be proven by what price is doing to us, right? So if the indicators are showing that we're rolling over, well, price then needs to roll over with our indicators for us to even get excited about a downtrend. But right now, I would not be doing that. I would not be looking to pick a top, because this market can go as high as it wants to. As much as we all think it shouldn't be up here, it's not what we think, it's what price does. Okay, so please just keep that in mind. All right, so now we're moving lower here. Now look at the dollar. The Fed is totally decimating the dollar, obviously, devaluing our dollar, and we're down here at these levels. So I was looking at back here in September saying, wow, we could get a nice, beautiful, healthy move to the upside. Well, since the Fed started talking about not tapering anymore, look what happened to the dollar. So that trade is off, obviously. And that's why we say we want a trigger. When you put a trade together, now you need to put the trigger together. And then you need to trade the setup and then the trigger, right? So that has now gone to the waistline. So we need to see, we're coming into some support here, but until the dollar reverses this bearish symmetry and start making higher highs and higher lows, and indeed holding pullbacks, that's something that I'd be looking for. But at this time, the dollar isn't there. But what is this doing to commodities? Well, commodities are really let me show you USO. The crude oil has been getting crushed, and really gold hasn't been doing much. So that's just an unusual factor as well. But I want to tell you that the oil trade is looking much better. And I wanted to show you this. This is just the bullish percent ENR holding up well at the 79, 80 percentile up here. But again, this is a spot where I like to look for selling, and look what happened here. We did get that sell-off. We had that head and shoulders pattern. Right head, left shoulder, right shoulder, neckline, we broke through. Now, we're coming into a 61.8% retracement here. And I want to show you that in the USO. But it's something that I want you to be aware of, that we're coming into some good support. And this is looking to be a better trade, for a trade. Remember, for a trade, I would be looking to buy on the next pullback in crude oil. Let's see where we go. And I'll show that to you in a USO. Let's take a look at, just quickly, let's take a look at the metals. Or you know what, let me show you. Before that, let me just show you what the VIX is doing. Holding at the lows here, not breaking down, but again, holding at the lows. Little bit of protection buying here in the puts, but really not much to talk about. So let's see. Let's keep an eye on the VIX here. I like to look at the VIX and a tick and a vol spread, VOLSPD, in the intraday during the course of the trading day to see where the trend has gone. Gives you a good idea if the market does decide to roll over, that does it have any legs. So keep an eye on this here. But now let's go back into, we'll take a look at copper. Copper fell right back from the symmetrical triangle, but held this lower trend line of the symmetrical triangle. Copper's going to need to take out 334 here. Okay, so if Dr. Copper is actually not going anywhere, and then you got the market's not really making it at all-time highs, obviously, because what's going on with the Fed, copper should not be, and I showed that to you, a bunch of indicators, a bunch of asset classes, and why I say that this market is totally insane. Dr. Copper usually leads the market, and it's not doing so, right? The market's going higher, and as you can see, what Copper did absolutely nothing for all of 2013. So anyway, make a long story short, I'd still be watching copper here because palladium is trying to break out here, and this is the leader. This is the leader out of all of the other metals, silver, gold, all the precious metals. Copper here took a step back, took a breather on this big symmetrical triangle. But if palladium starts to break out, you're going to get that dead cat bounce or that retracement rally in gold. And I want to show you gold here. But I want you to keep in mind, let's look at the bigger picture. Here's gold, and I like to still get that short off if I could. Now it's even better because that 200-day moving average is coming right into that 1425. That 38% retracement right up in here. But remember, the bigger picture in gold and that monthly chart is in a bear market. That 8 and 21 from 2001, it crossed over, and we were in a bull market ever since. We are now indeed in a bear market, and in order for gold to really take out, we're going to see that 8 and 21 cross over and hold above this area, which is going to be a lot of work to do. My guess, I think gold falls back down to at least 1,000, somewhere in this area here. And then that's where I would be looking to buy with both hands, at least for a trade, and get a decent pullback. Now, gold could hit 1,000 and then start to rally back up, and then indeed go back into a bull market. Absolutely, but as of right now, I'd be a better seller in gold. Okay, now let's get into let's go into the chart segment. Here is the E-mini. As I showed you, we hit our 1272 retracement. Okay, so that is. That definitely capped the market here. But look what's happened here. All week we've been up, down, and now we're down ever so slightly, down a few points. But that's bullish to me, right? The markets can't sell off. It's down 3.25 points. That is very bullish to me. So as much as I would love to see this market pull in, so we can at least pop this little bubble that we have here, and valuations could come in a little bit, it's just crazy and ludicrous for me to start chasing stocks at these levels. Now, the markets can rally as much as it wants. If that's the case, we're just going to be looking for some stocks that have actually paused, pulled back within this uptrend. You don't have to buy the market. Buying the market itself is just crazy. For me, for a hedge, makes all of the sense is to put a hedge on against your long position. Okay, so let's move this out of the way. Wanted just to show you gold. Really no change from yesterday. We did get a little bit of a pop here. There's a long downtrend line. Here is this wedge pattern within that downtrend line. We did break out. Again, I'm a better seller of gold, the 135 to the 137 area, right underneath that 200-day moving average. Now, here's USO. Here is why I like to see this. I like this trade. Here is this purple horizontal trend line. Volume zones here coming into heavy supply. Okay, this is the spot. 61.8% retracement just underneath that. This is where I would like to, at least for a trade. Now, this is a retracement rally. If you're counter trend trading and you really don't know what you're doing, I would not be doing this. However, if you do know what you're doing, this could be a really good, as you know, counter trend rallies. They are very fast and fierce. So we could get back up, at least retrace back up into this area here, or this zone. You see this other zone area, which would be the 38% retracement. And then we need to reevaluate, because now you're coming underneath the neckline. It's going to be a lot of resistance up at this area. But for a trade, I do like it for a trade in this area here. Okay, so let's go right into the sectors. As you can see, the spiders have gone nowhere for the last 4 or 5 days. Again, still bullish, but we do have this confluence area of resistance. Up here, we have this 2012 uptrend line. We have this horizontal uptrend line as well. So we're looking to come back here. Again, guys, a healthy pullback, at least to the 20-day moving average. I mean, this is just way too much. And to me, this is out of hand. When things get out of hand and this euphoria of buying, it doesn't end well. And I wish I could tell you when, but it just doesn't end well, and that's what scares me. That's why I pull the reins a little bit here. Okay, take a look at diamonds. Diamonds, again, had a little bit of a better day than all the others because IBM actually started picking up a little bit of steam, caught some buying. So IBM doing a little bit better, which helped the Dow itself. Now, Caterpillar, in another sense, did not, but at least IBM is heavily weighted in the Dow Jones. Here is the Russell. Again, holding the uptrend line. As you can see, we've gone really nowhere. We've gone maybe 60, 70 cents within. So a lot of the stocks also haven't really been moving, which has really been this indexes have been moving. So it's been a little tough picking up some good trades. Again, risk-reward, to me, I think risk is more to the downside. But risk-reward, picking stocks here and start chasing stocks is it's just not it's not in my trading plan. Okay. All-time highs in transportation sector, and that's obviously fueling the lower energy prices, is helping the transports move higher. And again, which will help the market because this is our leader. And look at what's happening here: 2 standard deviations away from the mean. Now, this to me eventually is going to end up pulling back. I don't know when, but it's going to pull back. At least my guess would be the first guess would be the 120.80, the horizontal trend line. Keep an eye on it, guys. Remember, when oil starts to move, transportation will probably pull back in again. Okay? And Goldman actually acted really well yesterday. Okay? Goldman actually picked up a little bit of steam, but again, has to break the 160 on a closing basis. Without that move, we could just easily come back down here. So above 160 on a closing basis would look, for me, next point target would be 170. But again, very, very sloppy trading, but I do like Goldman still to the upside. And XLF got a little bit of a pullback for 2 days, inside day from the previous day. I'd like to see the XLF come at least to the 20-day moving average and then look to reevaluate it again. Apple as well. Apple did really well here from the 494, but now is in need of a pullback. A lot of these high flyers need to rest and pull back a little bit. I'm not looking to chase Apple here. Apple come back into the 497, even the 500 area. It would entice me a little bit to see how this reacts to the 500 area, and then I would be looking for a pullback again, looking for some sort of an entry point. And lastly is the Qs, as you can see here, really have gone nowhere. So we've gone really nowhere this week. We made new highs, and we've gone nowhere aside from the transportation making new highs yesterday. So it's going to be a real interesting day today to see if they bid the market back up here, hold the markets, and then coming into next week, let's see if the markets start to roll over here. But without a catalyst, I don't see it other than profit taking. If the markets can gain some momentum to the downside, then I think you're going to get that rolling effect that everybody's going to start taking profits. Be safe out there, guys. Don't pick tops. Eventually, there'll be plenty of time. There's going to be plenty of room to the downside if you're looking to looking for a trade to the looking for the trade lower here. Okay, let's see what happens today. Have a great weekend. Get a lot of rest, and we will speak to you on Monday with a big report.